Let's bring in Alan Knuckman, Chief Market Strategist at BullseyeOption.com. Alan, I wanted to get a quick thought on the Fed. Powell greenlighting this market. We're seeing big gains across the board in all four of the major indices. You've got new all-time highs in the S&Ps and the Dow.
Don't fight the Fed. Don't fight the trend. It's that simple.
You know, Alan, it makes me think of a saying I was told. Can't remember who it was. One of the big traders in the S&P pit years ago. I'm talking 20 years ago. He said, this market was generated and created to generate wealth. He said, get long and just stay long, basically. He said, you know, don't bet against the U.S. stock market.
No, lower left, upper right. That's how life works. That's how everything everything grows, lower left to upper right. And so, you know, you've seen every opportunity be, you know, every pullback, profit-taking pullback, I'm going to say, obviously, has been an opportunity to buy back in. So if you look at this technically, the V recovery, we've got another 10% on the upside, the S&P, the distance of that drop on that old top. And looking at the NASDAQ, it's 20%. Wow. So, you know, it's not that we need to be scared, like your last guest said he was scared numerous times. Yeah. You know, these are trending markets. And unless you buy at the top, you know, typically things go higher. Yeah. Okay. Well, and we need the alternative perspective as well, right? We can't all be bullish this market. Otherwise, you know, there'd be no one to buy from. You know, right? Ultimately, you'd just be bidding prices higher and higher without any trade. But okay, so talk to me, because we just had some data come across the wire, which just sort of feeds into what Powell told us yesterday, seeing labor conditions which remain strong. Normally, when you see downward or when we see rate cuts, it signals again that we're in line for some weakness in terms of labor, but that hasn't really played out. 219,000 for the initial jobless claims. Looking at some of the Philly Fed data, kind of mixed. Looks like at 1.7, a little higher than expected, but prices paid were significantly higher. New orders were a bit lower than expected. Should we be concerned about the reemergence of inflation, Alan, right now? Does it bother you or does it worry you at all? No, I mean, inflation has been tamed, not psychologically, not to the average consumer or even investor. Yeah. It's not been tamed, but mathematically it has been. So that takes some time to sink in. Okay. And again, everything goes lower left, upper right. Prices, wages, you know, everything over time, growth, just because there's a growth pattern, everything expands over time. We wanted to get back down to a more reasonable level so it's not felt in the same way that it was. And like I said, this is more of a psychological problem than a price problem. And, you know, there's a reason that you and I are doing this Monday morning quarterbacking, not actually doing the rates. Because number one, we're not qualified. So we want to talk about Powell getting us to this point, a perfect play to this point, 0.5%. And the markets are telling us that by January, there's going to be another 0.5%. You know, there's an 80% chance there's going to be another 0.5%. So, you know, let's see where we go from here. But the question I'm going to ask you, Ben, do you think that Powell in his back pocket knows that he's got some data that's not that weak, so that people can't question, you know, him doing this because the market's so weak? So we got to start doing some reverse psychology on what he's doing. Okay, and that's a question for Oliver Rennick, Alan. I'm more like you. Price is king with me. I don't overanalyze or overthink things like that. You're getting way ahead of me here. Hey, I'm trying to give you some content. Otherwise, all we can say is it's a bull market. Hold on. I asked the questions on this show, Alan. This is my show. Else to say. Hold on. No, let's get back to markets here real quick, because you've been talking about a super cycle for a while. We're seeing that with gold in a big way. New all-time highs as we speak, just off them. We're talking 620.50. Copper, crude oil, silver, all starting to participate. We're seeing big moves across the board, Alan. And the common denominator, and we're going to talk about, is the dollar. But let's keep an eye on silver. Silver's sneaky here. And once it got above 29, it stabilized. That's been a key pivot point. It's stabilized. It still has a lot of upside here. And you know how silver moves. All of a sudden, it's going to move very quickly. Yeah, breakouts. And it breakouts. And we had the breakout in gold, and that targets, what, 2,700 initially and then higher in gold. And copper is starting to play ball, too. But the common denominator is the dollar. The dollar here testing this 100. Let's see where it goes. But again, it's simple. If we're going to continue to cut rates, then the dollar doesn't have
the ground to stand on.
Situation to go higher.
Yeah.
So if it can't go higher, it's got to go somewhere. So it's going to go lower.
Is that what you're waiting for? Is dollar weakness to provide the catalyst for silver again up and through some of that resistance? Copper, for example. I mean, nice move back to 430, but still some heavy lifting for the bulls to do. We've got that high from recently. What was that? Around 520, 530.
Right, but that's more of a China story for right now. So but everything's in a strong trend. We've got rates down, VIX down, inflation down. You've got market up. You've got dollar down, and these trends will remain intact until proven otherwise. And that's just what we've got to follow right now. I'm not trying to be the smart guy. I've said that before, and I've proven before that I'm not the smart guy, and I'm not going to try and pick the tops or the bottoms of anything.
But you are the most optimistic guy that we have on the show, and you've been right, Alan. I'll give you credit for that. That's for sure. Alan Knuckman joining us, Chief Market Strategist at BullseyeOption.com.